Hi there, Internet. My name is ᴄᴏᴘɪᴇ, and I am one of eToro's most copied popular investors. Today is Friday, the 30th of April, and that means one thing. It is time for my weekly review. Let's take a look. Okay, it's been quite a week for earnings. We've seen most of the tech titans in the US report through the past week, and for most of them, earnings were really good. So historically, through the quarter gone, the numbers for Apple, Amazon, Facebook, Google, all very good. And the forecast through the year for most of them is also pretty fantastic. This might leave you scratching your head a little bit and wondering why we've seen froth in the market yesterday and a sell-off today. And I think there are several reasons. One is that the markets have rallied in expectation of really good earnings, as you can see on screen. It has been a really, really good quarter for the S&P 500 and for those companies outside of the S&P 500 in the US too. And because this was expected, people bought up the stock ahead of time, and now that they have reported, we're seeing some people exit their positions, take profit, and reposition that cash. I do think that the big tech companies are still good to hold, particularly given the good forecasts that they've given for the rest of this year, and probably for next year too. It is also the end of the month, so some financial investors, institutional investors, will also be rebalancing their portfolios given the profits that they have made. I think there are other reasons potentially for the little bit of a sell-off that we've seen, but I'll talk about those in a moment. In addition to the big names, we've seen many smaller names report too. So one of them was AMD. AMD stock price has been more or less flat since August last year. Unlike a lot of the rest of the market, their stock price hasn't risen in anticipation of earnings, really. And the company posted fantastic earnings, but the real surprise was the guidance that they're giving for the rest of the year. So revenue growth of 50% through this year. The fact that the stock price now is lower than it was at the point where they reported earnings really doesn't make sense, but this happens from time to time. So it might be that the overall market is carrying the stock prices of great companies lower when they really should be going higher, and this creates opportunities for us. So I've been increasing my position in AMD because it does not make sense that the stock price has been going lower, especially since it's been flat for so long, and given the growth that they've posted and the growth that they are forecasting. So good for us. Another example of a company that has beat on earnings but has dropped is Enphase. So Enphase reported earnings. It's a solar company, by the way. They reported earnings that beat expectations, but they forecast that they would probably sell less. They would have less revenue through this year than they'd originally anticipated, not because of a lack of demand, but because of the inability to supply that demand. And we've seen this theme playing out through this week. We've seen several companies specifically call out chip shortages and their impact on revenue through the coming year. Now, this news isn't new, but before it didn't actually have a number on it. And now we're seeing automakers, companies like Enphase, even Apple, say that with the current chip shortage, there are certain things that we are not going to be able to supply. There's demand that we have that we cannot fulfill. And this is what it means to our sales, to our revenue and profit. I think at the beginning of this year, I said that this was going to be a theme for the year, and it has, and I think it will continue to be for a while. You can see there are various forecasts about how long it's going to last. But wherever there is a challenge, there is opportunity, and I'll talk about that too. So Enphase, they posted great earnings. They had to bring their forecasts down, and when they did that, the rest of the solar industry tanked. For those of you that are invested. So for the 1 week view, you can see Enphase, First Solar, and Canadian Solar, and the solar ETF have really had the legs cut out from underneath them. And this is because the market is anticipating that these companies will have the same challenges as Enphase. Now, First Solar, one of the companies in that list, proved that to not be the case. First Solar's earnings last night, they had an enormous beat. Their profits, their earnings are up about 100% year on year. Just trying to find it in my notes, which meant that they beat on earnings by 66%. So they're in a hot industry, a fast-growing industry, where they're seeing lots of government intervention and investment in the industry. This company is beating expectations by 66% on profit, but today I think the stock price is down 8 or 9%. Absolutely does not make sense. They didn't increase their forecasts for the year, so maybe that's a reason for the drop, but I don't see how. There's absolutely no bad news here anywhere, and the company is demonstrating that they're doing fantastically. So again, the market has been irrational. A growth industry, a good company in a growth industry, posting good growth, yet the stock price massively down. So again, opportunities abound. We just need to have a plan. We need to know the companies well. We need to know our industries well, and we need to be able to recognize these industries, and also have the stomach to wait out the market being irrational. All right. I touched on this earlier, but I don't think I mentioned the numbers. So 285, maybe 290 companies in the S&P 500 have reported earnings so far. 86% of those companies have met or beat expectations, analyst expectations, in terms of their earnings. So it's been, like I said earlier, it's been a fantastic quarter. This just gives you some numbers around specifically how the companies in the S&P 500 have been performing. They've been doing very well. And this is a good signal for the rest of the year too. So there's been some froth through this week, and there's a sell-off and profit taking going on now. But if we step back and look at the bigger picture, we can see that there's nothing to be worried about, and there's still probably a decent bull market ahead of us for 2021 and through 2022. Okay, so in other news, we're seeing travel corridors. Now, these have been spoken about for a while, but now that the vaccine rollouts have progressed fairly well in certain countries, the talks about them are becoming a bit more concrete. So we're seeing governments now meeting to establish these travel corridors, which is quite interesting. So there are quite a few that are talks that are taking place at the moment. So between the UK and US, the US and Europe, the UK and Spain. And so, and on the back of this, we're seeing travel stocks, airlines do very, very well today. So this is great news for lots of companies that have had a very, very difficult year, and for the people that work for them. In terms of the Chinese regulation, so this has been going on for a while, but we haven't known the details about what might happen as a consequence of this regulation. And now we're getting a bit more information, which is good because the market hates uncertainty. It doesn't mind bad news so much, as long as it knows what that bad news means and it can price it in. So Alibaba got a huge fine a while back, and China's been calling in more and more of its tech companies, telling them, you need to do these things in order to remain compliant. Otherwise, we're going to step in. So yesterday, 10 more companies were called in to meet with the regulator. The funny thing is that these companies have been fined, I think, $77,000 for anti-competitive behavior, which is peanuts. It's absolutely nothing. On top of this, the Chinese regulator wanted to review any request for mergers or acquisitions because it wants to make sure that its marketplace is still competitive, so that there isn't one company that's just buying all the competitors up and dominate the market. And the second major action is that if a company has a payments capability as well as other financial products, it wants these companies to decouple those, so that they aren't giving themselves a leg up through one or the other offerings, which is good. I don't think that this will have a big impact on any of our holdings. This seems to be targeted towards the bigger companies, and actually these anti-competitive regulations mean that smaller companies will have a better chance of success in the long run, which is great. In other news, it's not new news, but the US is investing heavily in its semiconductor capabilities China has been doing so for a while. And the EU doesn't want to be left behind. But in the past few days, they've started formalizing what they're going to do a little bit more. So the EU wants a slice of that pie. They're looking to double their ownership of that pie to 20% of the semiconductor industry by 2030. This is incredibly ambitious. They're going to have to throw a lot of money at this. I don't know if it's overly ambitious. We'll find out. But as I mentioned earlier, I was talking about the chip making industry and the chip shortages and how it's creating problems for some other industries. But actually for the chip making industry itself, this is fantastic news. The demand is massive. They can't meet the supply immediately. But 1 to 2 years from now, that whole picture will have changed. Governments will have poured money into the capabilities. Current companies will be better for it. And we probably will see some new companies too. Okay, and lastly, I don't have anything up about it, but the US income in March rose to record levels. And this was probably almost entirely driven by stimulus checks, maybe some companies opening up, so people in employment. And that means that people were able to spend money, that money that they had, and this has driven growth in the US, which is good, but the concern will be that this was a temporary blip. I don't think it will be, because I'm not sure if you've been seeing the headlines, but many companies in the US in the hospitality and travel and retail industries are not able to hire people fast enough because there's just so much demand. They're throwing money at the problem. So, which I think will create an inflation problem down the road. But for now, it means that they're pulling a large part of the unemployed population into employment, putting money in their hands, letting them participate in the economy. All right, so for next week, I've been talking about how problematic coronavirus has been for India for a while. It's been terrible what's been going on in India. And over the past week or so, we've seen companies and countries around the world offering and providing help to India. There are a lot of negative headlines out there at the moment. So this is one that really made me quite happy to see that there are still good people and companies out there that are willing to help out people that aren't, part of their group. So good on you, world. You're doing a great job. All right, earnings are not over just yet. So we've had the big companies report, but I think this one is incorrect. I don't think Alibaba is reporting today, but you'll see that through the next week, I think the next week runs up to May 7th, we're seeing a decent number of companies report. So there's a bit of a sell-off and profit taking today. It might continue through to Monday, I'm not sure. But then we'll see these companies report, and depending on the reports of that week, I think we'll see the market direction set. Okay, and lastly, I just wanted to touch on, I have subscribed to the Substack. It's fantastic. This is Brian Feroldi. He works for the Motley Fool. He's a long-term investor. He puts out one of these little diagrams, I think daily or every 2 days, and I find them fantastic. So this is quite a nice little one. Just shows you that investing for the long term, having a long-term mindset, is definitely superior to trying to jump around the markets. All right, that's it for today. Have a great weekend, and I will speak to you next week.